Welcome back to another episode of Market Brief After Hours. It's been a fascinating Thursday on the global markets. We saw a definite shift in the wind today, a real risk-on session, where investors seemed to shake off the recent jitters. The gloom from earlier in the week lifted, and we saw a pretty broad-based recovery.
Absolutely. It was a classic rebound. The market essentially decided to stop worrying about the geopolitical headlines for a moment and focus on the fundamentals, specifically corporate earnings and economic data. And frankly, the numbers looked good. We had a double-engine rally today powered by two heavyweights, the banks and the chipmakers.
It's interesting you mentioned that combination. Usually we think of tech leading the charge alone, or maybe financials doing the heavy lifting when rates are high, but seeing them rally together is a strong signal. Let's get right into the numbers. How did the major U.S. indices finish up?
It was green across the board. The S&P 500 managed to claw back its earlier losses, closing the session at 69.44. That's a gain of about 0.26%. It doesn't sound massive, but considering where we started the week, it's a solid recovery.
And the Dow Jones? I heard the financials really helped out there.
They certainly did. The Dow Jones Industrial Average was actually the standout performer of the three major indices today. It added over 292 points to close at 49,442. That's a 0.60% gain. You can thank Goldman Sachs for a big chunk of that. We'll get to their earnings in a bit, but they really pulled the index higher.
And finally, the tech-heavy NASDAQ?
The NASDAQ Composite also finished in positive territory, closing at 23,530. That's up 0.25%. This was really a semiconductor story. We had impressive earnings from Taiwan Semiconductor, TSMC, which basically lit a fire under the whole sector. Their capital spending projections for 2026 are incredibly optimistic, and that signaled to the market that the AI growth trajectory is nowhere near slowing down.
So the AI narrative is still very much alive and well. It wasn't just a U.S. story today, though. It seems like that chip sector momentum spilled over into Europe as well.
It did. The Pan-European Stock 600 advanced by 0.6%. But if you look at the individual countries, you can really see the impact of that tech news. In the Netherlands, for example, semiconductor equipment makers like ASML had a banner day. ASML closed 6% higher. That's a massive move for a company of that size.
And looking at the major national indices in Europe?
The FTSE 100 in London climbed 0.54% to close at 10,239. Over in Germany, the DAX 40 regained some ground, closing about 0.3% higher at 25,352. It's actually getting very close to its record highs again. Italy's FTSE MIB was up 0.44%. The only outlier was France, where the CAC 40 dipped slightly by 0.21%. But overall, the mood in Europe was buoyed by better-than-expected economic data. The UK economy grew by 0.3% in November, which beat forecasts, and Germany managed to expand by 0.2% in 2025, ending a three-year stagnation.
That is significant for Germany. It's been a tough road for their economy lately. Now, before we move on to the currency markets, we have to talk about commodities, specifically oil. We saw a massive drop today. What happened there?
That was the geopolitical risk premium evaporating in real time. Crude oil futures tanked over 4%. Brent crude fell $2.88 to settle at $63.64 a barrel. WTI, the U.S. benchmark, dropped $2.89 to close at $59.13.
That is a sharp pullback. Was there a specific catalyst?
It was comments from U.S. President Donald Trump. He indicated that he'd received information suggesting a halt to hostilities in Iran, specifically saying the killing had stopped and there were no plans for executions. The market took this as a sign that an imminent U.S. strike or further escalation was off the table for now. When the fear of supply disruption fades, the price drops.
It really shows how sensitive energy markets are to headlines right now. Let's pivot to Asia before we take a break. It seemed like a mixed bag over there.
Very mixed. The headline story was South Korea. The Kospi surged 1.58% to hit a record high of 4,797.55. The Bank of Korea decided to hold interest rates at 2.50%, and investors loved it. On the flip side, you had Japan's Nikkei 225 slipping 0.42%, although the broader Topix was actually up. And then you have China.
China seems to be struggling to find footing despite the trade numbers.
Exactly. China reported a record trade surplus for 2025, but the markets didn't care. The CSI 300 fell 0.42%, and Hong Kong's Hang Seng lost 0.66%. There was some specific bad news there, too. Trip.com shares plunged over 17% because of an investigation by China's market regulator into monopolistic behavior. It just reminded investors of the regulatory risks that still exist there.
It's a complex landscape globally, for sure. We're going to take a quick break, but when we come back, we are going to do a deep dive into the Forex markets, specifically looking at the moving averages that technical traders are watching right now, and we'll run through the biggest individual stock movers of the day. Stay with us. Welcome back to Market Brief After Hours. We've covered the broad equity markets, but I want to get technical for a moment. For our listeners who trade currencies, there were some very specific technical setups developing today. Let's start with the euro against the dollar.
The USUR is facing some serious downside pressure. It closed at 1.1605, down 0.33%. But the real story is where it closed relative to its moving averages. It finished the session below both the 50-day simple moving average at 1.1651 and the 100-day SMA at 1.1664.
So those short-term averages are now acting as a ceiling.
Exactly. They are acting as resistance. The pair is currently testing the 200-day SMA at 1.1580. That is the critical line in the sand. The long-term trend is technically still underpinned by that rising 200-day average, but if we get a sustained break below 1.1580, it opens the door to the psychological 1.1500 level.
What about the British pound? Is it looking any better?
Unfortunately, no. The picture for GBP USD is actually more bearish. It closed down 0.52% at 1.3377. It slipped below both the 100-day SMA at 1.3367 and the 200-day SMA at 1.3399. When you lose the 200-day, that signals an acceleration in bearish momentum.
So where's the support if it keeps falling?
Immediate support is at the 50-day SMA, which is at 1.3316. If that breaks, we're looking at 1.3250. The structure shows lower highs since late September, so the bears are definitely in control there.
Let's find a bull market somewhere. The Aussie dollar?
Yes, finally some green. AUD-USD is holding firm. It closed up 0.25% at 0.6697. It's trading comfortably above all the major moving averages. You have the 50-day at 0.6580, the 100-day at 0.6582, and the 200-day at 0.6525. Importantly, all those averages are rising in bullish alignment. It's a well-established uptrend.
And quickly, this was Frank?
USD CHF closed up 0.48% at 0.8035. It's showing improved short-term momentum by moving above the 50-day and 100-day averages. However, it's hitting a brick wall at the 200-day SMA, which is at 0.80585. That long-term average is declining, so it's capping the upside for now.
Fascinating stuff. It really pays to watch those levels. Now, let's talk about the individual companies that made waves today. We mentioned the banks earlier.
We did, and for good reason. Goldman Sachs was the star of the Dow, adding more than 4% after they beat earnings expectations, specifically with strong FICC, fixed income, currency, and commodities, sales and trading revenue. Morgan Stanley had a similar story. They gained over 5% after their trading revenue beat market expectations.
And it wasn't just the investment banks. BlackRock had a massive day too.
Huge. BlackRock shares rose more than 5%. They reported fourth quarter net inflows of nearly $342 billion. That is well above consensus estimates. It just shows the sheer scale of capital moving into their products.
Now, not everyone was celebrating. The crypto sector took a hit today.
That's right. Coinbase Global fell more than 6%, and Strategy dropped over 4%. The catalyst there was regulatory delay. The U.S. Senate Banking Committee delayed discussions on a crypto market structure bill. Markets hate uncertainty, and this just pushes the timeline for regulatory clarity further out, so investors sold off those crypto-linked equities.
We also saw some big M&A news today.
Two big deals. Talen Energy jumped over 12% after agreeing to buy 3 natural gas power plants for $3.45 billion. The market clearly likes that they are strengthening their power generation portfolio. And then Penumbra rallied more than 11%. Boston Scientific agreed to acquire them for about $14.5 billion. That's $374 per share.
That is a significant premium. Before we wrap up, we need to touch on the economic data that came out of the US today. We talked about the risk-on mood, and a lot of that came from the labor market, right?
It did. The labor market data was surprisingly resilient. Weekly jobless claims came in at 198,000. Economists were expecting 215,000, so fewer people are filing for unemployment than expected. The 4-week moving average dropped to 205,000, which is the lowest level since January 2024.
That sounds great for the economy, but what does it mean for interest rates?
That's the double-edged sword. Strong data means the Fed is in no rush to cut rates. Following this report, Treasury yields edged higher. The 10-year yield moved up to 4.171%, and the 2-year yield climbed to 3.568%. The market actually recalibrated its expectations for an April rate cut. The probability dropped from about 34% down to 30%.
And we also saw some manufacturing data that blew expectations out of the water.
We did. The Empire State Manufacturing Index surged to 7.7, smashing the forecast of 1.0. And the Philadelphia Fed Index rebounded to 12.6, when the forecast was negative 4.5. So despite high rates, manufacturing in those regions is showing real life.
So to summarize, banks and chips are leading the rally, the U.S. economy looks resilient, Europe is recovering, but geopolitical risks, while easing slightly today, are still hovering in the background.
That is the perfect summary. Investors are feeling good about growth right now, but they are keeping one eye on the Fed and the other on the headlines.
Well, that's all we have time for today. Thank you for listening. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform so you never miss an update. We'll catch you next time.